Hello everyone! Welcome to a new video on the channel. I hope you are all safe and sound. Today I would like to share with you 6 tips, or maybe more than tips. I would just have to say just actual things that I'm implementing in my day-to-day investing strategy and that at least have been working for me. Especially, I would say that this video can be very interesting for beginner stock market investors. And just for the record, I am not saying that I'm a pro or anything. I'm still learning day by day. So these are really just the things that I'm currently learning and that I would like to just share with you. Just to give you a bit of context, I have been investing in the stock market for 4 years now. And the way I started is actually quite funny. When I turned 18 years old, I literally just went to my bank and I told the man in the reception, hello, I would like to buy 2,000 euros worth of stocks of that same bank. Of course, the man at the reception looked at me a bit with, surprised face and so on. But in the end, I managed to get my first 2,000 euros worth of stocks. That was my start. Everyone has their start, and I like to think that right now I'm doing things at least in a better or more professional way than when I started. Just one final thing before we jump right into the topic is that these 6 tips that I will be sharing with you are things that have been working for me, and the main purpose of it is hopefully to inspire you and help you in some way. So without any further ado, let's get started. Tip number 1, invest in the long term, or at least with a long-term view. Why do I say that? Well, basically when you're investing in the long term, you're using money that you don't need today, next month, and hopefully in the next years to come. You should never be investing with money that you need for your day-to-day living, but sometimes people get carried in the emotions, and this can become very dangerous when you are using money that you will need in the next, let's say, 10-15 days. Moreover, investing in the long term means that you're not day trading, swing trading and so on, which basically implies that you don't have to look at the stock price every 2 minutes or 1 hour. You can just look at the stock prices once every 2 weeks, once every month, because if you are not planning on selling it, it doesn't matter really for you which is the current price of the stock. And in my opinion, this just allows you to live a much more relaxed and comfortable life, especially if you are a beginner. Tip number 2, subscribe and like this video. This is literally the best investment you can do, because hopefully you are getting some value out of my videos, and if you subscribe to the channel, you'll make sure that you don't miss any of the new content. Now for real, the second tip is to never invest in something that you don't understand just because you have heard in the radio that it's the greatest investment of the lifetime, or just because a friend has told you. Do your own research and understand what is it that you are investing or you would like to invest in. Remember that the stock market is kind of a competition, and that if somebody is making money, it means that someone else is losing money. Therefore, you need to be prepared, because you'll be playing against professionals with a lot of experience that are much more likely to make money than you are. Tip number 3, focus on the value of stocks. As I mentioned before, you should do your own research, and if within your analysis you see that a stock is clearly undervalued, don't feel afraid to take a position. I know that everyone is different and is willing to take different risks, so again, don't listen to what other people say and just focus on your own strategy. Among the things that I always check before buying a stock is I always check the record on which have been the profits of the company. Is this company growing in profits, decreasing, and so on? I'm also checking the debt. Is it a company that is very much indebted? How much cash do they have in hand? And this is specifically relevant for situations like the one we are currently living in which companies maybe don't have any revenues for weeks or even months, and therefore it's very important that they have cash in hand in order to survive this period. Then the next thing I do is to check on the news which are the recent things that the company is implementing, whether it's part of their core business, or maybe there have been some scandals regarding in payments or irregularities or things like that. And finally, as a good dividend investor, I check, of course, which is the dividend yield that they pay, and also the payout ratio. The payout ratio is basically how much of their net profits are they using to pay the dividends to their investors. Therefore, the lower this percentage, the more safe and likely this company is to continue paying these dividends. This is just what I'm personally doing, but many other people are checking many other metrics. And also it depends on the type of trading that you are doing. And also something super important for me that I would like to share is that don't enter a position or in a stock with only one time. If you are planning on putting 1,000 euros into a stock, with the low commissions that we have nowadays in many countries, it is better to enter maybe in 2 or 3 times. Why do I say that? Because in periods like of increased volatility, like the one that we just lived like 4 weeks ago, when the market was crashing, maybe you saw a very good opportunity and you put in all your money into the stock, and then the stock even went down more. So it's better to just enter a bit on your position, and then if it goes down more, then you add more to your position. And at least if it then goes back up, you already have a bit bought on that stock. And just to give you a very brief example, with my investment portfolio that I shared with you in a video just a few weeks ago, and I will leave it here in case you have not seen it, my worst performing stock is Banc de Sabadell. And this bank, I basically have been following for several years now. It's the first stock I ever owned, and when I saw that the stock market crash was beginning, of course I didn't know that it would keep on going down. I thought it was at historic minimums, so I just entered the position with 1,800 euros all at once, and that was a good price in my opinion, but it still went down, and it went down up to 50% below what I had entered the position. Therefore, if I had at least entered in 2 to 3 times, I would have minimized what I am currently down in this position. Tip number 4. Find a balance between being patient and being too brave. There are some people who just wait for a stock to go down to a certain price to buy and so on, and in the end opportunities just pass in front of their face and they never enter the market. On the other hand, there's more impulsive people. I consider myself as one of these more kind of impulsive people who maybe take positions without thinking it well enough. So therefore, it's very important that you understand which kind of personality or behavior you have. Understand it very well and just try to find a balance between being too patient or being too brave. But the most important thing, regardless of whether you're a patient person, a brave one, impulsive or whatever, is that when you buy that stock at that price, you're convinced that it's a quality stock and that the price that you're paying is at a fair value. And then of course, it's what I just mentioned before, that if you're impulsive, try to enter the positions in 3 different times. Even if you're not, I would also recommend you to do so. This way you will basically avoid things such as my current position on Banc de Sabadell and the example that I just gave previously. Tip number 5. Only buy stocks that you would be comfortable holding for the next 10, 20 years or forever. And what I mean with that is that try to invest in sectors or companies that you see potential in the future despite current results. What I mean with that is that me personally, for instance, I think that renewable energies are the future, and even if I buy a stock of renewable energies right now and it goes down in price, maybe because the government doesn't promote this kind of energies, I am 100% sure that this is the future. Well, I just believe that this is the only way, so I will feel very comfortable holding this stock for the next 10, 20 years and, as I said, forever. On the other hand, and this is again just following this example, I don't see that much potential in banks in general. The reason for that is that interest rates are super low, and also that they are facing increased, let's say, competition in terms of, for instance, cryptocurrencies that just make transferring money from one place to another just much easier than when you're doing that through a bank. So basically, just make sure that whatever company you invest in, you would feel comfortable holding it even if the stock goes down in price. That's it. Tip number 6. Buy companies that pay dividends. Of course, I had to mention that. This is very important psychologically because even if the stock goes down in price, you know that at least you are getting paid every quarter or every 6 months or every year or whatever, but at least it's something that I think that psychologically when you're starting, it's very important. Moreover, and this is the best part for me, is that when you buy dividend stocks, you are generating a completely passive income source, meaning that you buy those stocks and that's it, you don't have to do anything else and the companies just keep paying you the dividends. And with this last tip, I think that I will leave it for today. Just a bit of a reminder that this is just the things that have been working for me, but I'm not saying that this is the only way to generate money or even the best way. Again, I just want to remind you that I'm not a financial advisor of any kind and that this video is for entertainment purposes only. Anyways, I hope that this video added some value to you. Let me know in the comments below which of the tips that I shared with you did you like the most. Maybe you're planning on implementing in the near future, or maybe there's a tip that I've mentioned that you're already implementing in your investment strategy and that is working for you. Let me know in the comments below. Thank you very much and see you next time.